Good evening, everyone, and thanks for joining us here on WBKO Plus. I'm Casey Freeman, and this is Getting Real with Real Estate, where we're taking a deeper dive into the housing market here in South Central Kentucky. I'd like to first introduce you to our panelists. First, we have G. Money Brown, who is an agent with Crye-Leike here in Bowling Green, and he's been in the business since 2019. And next to him, closest to me, is Amanda West, who is also with Crye-Leike, and she's been an agent since 2018. Thank you guys both for joining me, and of course, I would love for you guys to take a little minute and talk about yourself and about your business and who you serve.
Yes, so hi guys, I'm Amanda West. I'm an agent with Crye-Leike. I work mainly with new construction and residential resale.
Hey guys, I'm G. Money Brown, and I'm also with Crye-Leike, as Casey stated. First-time home buyers, people looking to resell. A lot of my business is actually on the investing side, so I help a lot of people find rental properties, flip homes, help with property management, so it's a pretty good balance.
Can I call you G? Can I just call you G?
Yes, please.
Okay, great. Because
I'm like, G.
I feel like we're like
Yes.
in this space where we're just taking it chill and just really getting down to the nitty gritty of real estate. And this is kind of just how we talk normally.
Yes.
You know? So I've had the pleasure of sitting down with them before and getting to know them. So I know that you're going to have a good time. And now over the last few years, we've been keeping our eye on the real estate market. And during the pandemic, we saw a lot of movement because of the shelter-in-place ordinances as well as extremely low interest rates. And at that time, we saw a pop in those home prices going up across the country, honestly. And now we're starting to see some normalcy come back around. So my question to you guys is, in comparison to what we saw during that time, what are we seeing today? Amanda, we'll start with you and then we'll go to G.
Yes, so I am super excited about the market that it is now, just because it's not near as chaotic. We as agents get to schedule buyers consultations, get them with lenders, get them pre-approved prior to, hitting the asphalt and showing homes. Back during the pandemic, everything was so chaotic that, property would come to market and we'd have maybe 4 hours to get our clients in there, write an offer and get something done. And it was just, plus, it was taking such great lengths to get a contract, executed. So therefore, people were looking to go over appraisal prices, skip inspections, which is all components of we as agents that we don't like that type of real estate. And so I welcome this market.
Yeah, definitely. And to just piggyback on what you said, on a personal level, the biggest thing I like most is I get a chance to spend time with my clients. Like I said, previously when rates were 2.5, 2.6, you're like, hey, great to meet you. Thanks for whoever referred you to me. Let's go right now.
Yeah.
And some of those people, I never got a chance, usually I would find out who their kids is, when their birthday was, what they like to do. It was, no, let's go buy the house. So anyways, it's much more convenient now. You get a chance to build rapport. You get a chance to really find out what people want and what they're looking for in a home.
I definitely agree with you. And I feel like at that time, it was like everybody just wanted to get in, and I know a lot of people are going to want to ask, like, are we going to see that again? And I know that we're going to talk about interest rates a little bit later, but for those who are like, right now, are we going to see those interest rates again? What do you guys say?
I don't think we will. I think that the recent rate cut will hopefully show some reprieve here soon, but I don't think that we will see that in the near future.
Yeah, same. I don't think we will. And truth be told, you don't want to see it again for a couple of reasons. One, if we get back to there, that means something in the world has gone really bad. Like COVID, it was a scary time. People getting laid off, losing jobs, it was a bad time. And second, I personally like this market more because this is a market where you can build wealth. And when I say that, I mean, you might be able to buy a house that's truly worth $300. You might be able to buy for $280, $285. And that's beneficial because when you're thinking long term, that's $15,000, $20,000 of net worth that's added to you down the road.
For sure. And we're going to continue to come back to this over and over and over again. And recently we've reported that Governor Beshear has been investing millions of dollars into our region and into our area, going towards creating several jobs as well as infrastructure and disaster relief programs, as well as much more. Now, we've reported a lot on that here at WBKO. And how is this development actually affecting the real estate market here in our region?
I will say I do believe I saw an article where Bowling Green was voted like one of the top places to reside, and I think that's amazing because I have seen an influx, me personally, with out-of-state buyers, which is amazing. I have clients from Colorado, California, Texas, all over the country, and I think with Bowling Green being a larger melting pot, I welcome that, and I love to see a city of growth and bringing in new families. Plus, we have all kinds of amenities to appeal to families.
Yeah, agree. And as far as the growth goes, I know there's some people that don't love it. They say, man, Bowling Green is a small place. You want this, You've got WKU, you got the medical center, all the manufacturing that's coming in. This is good for our community because the good thing about Bowling Green, geographically, we're between two good-sized cities, and when people come here, they're like, man, this place is big enough to enjoy and raise a family, but it's small enough to where I still feel like I matter. And so I love the growth that's coming, and Bowling Green will continue to grow, but with that, you still get a big town, small town vibe, and it's cool.
I definitely will agree. Now, I know you guys know that I've only been here for a few months, and so I'm still really learning the lay of the land, but I definitely will agree with you with it's like you do get the best of both worlds, and you have so much proximity to everything that you really need and want. And even speaking of like a lot of out-of-town buyers, we recently just honored a California woman who came here, moved here, and been serving like in our community and is a hometown hero. William Battle did that story, so if you want to go and check that out after this segment. But anywho, a lot of people that are coming in from these other states have a lot more developed infrastructure in place in those cities, and they're used to, bigger cities and more lanes and all this stuff. What type of infrastructure do you think that you need that will support the development that's happening, like from a boots on the ground perspective that you have here in Bowling Green or the area?
Schools. We have 5 amazing high schools, several great elementary schools, but we need more. A lot of our classrooms are too big. And that's not the fault of anybody. It's just we've experienced great growth that we 10, 15, 20 years ago, Bowling Green didn't expect. So that's the biggest thing, schools. Obviously more roads, and that'll could come with time, more roads and wider. But I would say number one for here, schools. In childcare, I have so many clients that they're talking about, man, I don't have anywhere to take my child. Yeah. And so that's a big issue that needs to be addressed.
I would agree wholeheartedly with all things mentioned by G. I mean, I know I definitely would appreciate some wider roads. I drive a larger truck.
Yes, you do.
I need some space, and lines are helpful at night. But no, definitely daycares. A lot of my clientele, the waiting lists are pretty long and extensive. The schools, we have amazing schools. We have future development for the schools. I do know that there's schools coming on south side. I know there's another property located in the Alvaton area. So we're headed there, but we definitely excited to see the growth.
For sure. I was talking, now I don't have kids now, so I can't, put the kids on me. But I was talking to David Walter, our chief meteorologist, who's over there just clicking away. And I was telling him, I'm like, oh my gosh, like the price of daycare is like the same payment as like a mortgage. And it's ridiculous. I'm like, oh my gosh, I couldn't even imagine like paying for home and then daycare, like you're working for daycare almost.
Yeah. And again, not the fault of anybody, but around daycares, there's so many restrictions. There's only so many kids you can have in a classroom, which I know are smaller kids, but some of it is just a little tight. So if that was loosened, some of the restrictions. I have a good friend. Shout out to Chase Carpenter at Bundles of Joy. He runs one of the largest daycare centers in Bowling Green, and he's just maxed. He's got more physical space, but state laws to protect the children doesn't allow for more.
What about all the roundabouts? Why do we have so many roundabouts here? Like, I feel like we have just as many roundabouts as lights, in my experience. Now, I only go to Sam's, so I experienced 2 roundabouts immediately,
I like the roundabouts. It did take me a second with a truck and trailer. Yeah. Might have yeeted a sign out of my tailgate today. But I do like them. It does seem like they are keeping the flow moving. as far as, not guessing on who's next. But, navigating them, it's working, I think.
Well, no, yeah. So you got to take what the option was before. So I got here in 2014, and the roundabout near campus, well, there wasn't a roundabout. The street, it was always backed up.
Yeah.
And I'm like, man, this is painful. So I don't know if the roundabout's the best, but it is better.
Okay.
So I'm telling, like, from where just that intersection, you go by campus, it was worse.
Okay.
Yeah.
Now I'm about to go straight for the jugular with this next question. I'm going to be honest, so brace yourself, okay?
Ready.
We're going straight in to the NAR lawsuits now. More recently, the National Association of Realtors has made some changes for agents, in which has gotten a lot of media attention, and some of that media coverage has been confusing for buyers and sellers, and even some agents in the business, but many agents are not pleased overall with the message surrounding that coverage. And that's part of the reason why I wanted to have this panel, to give you guys a platform to really explain to viewers in our area what's really going on with these changes, and really getting into a look for those looking to buy and sell. Now let's take a look at this graphic for a moment. Now there are a couple of points on this graphic here that are really about implementing those new rules. Now that's according to the National Association of Realtors website. Now these 3 changes in short mean, because we want to just explain this language here now, agents are no longer allowed to advertise cooperative compensations on the multiple listing service. That's MLS for short. So when they start talking about that, you'll know that MLS means that. And all compensation is to be negotiated in the offer. So I know that just became into effect just over a month ago. How has that really been so far with yourself, your business, as well as your clients, or talking to your customers? I know I just asked a loaded question there.
Yes.
So please take as much time as you need to answer all the questions.
Yeah, so I know for me personally, it has not changed much for me. I always advocate, for my clients and do what's best for them. And agent commissions has always been negotiable, so therefore we're just communicating more. For me personally, all it's really done is just allowed my colleagues and I to communicate more about their listings, instead of it just be readily available on the MLS services. So for me personally, it hasn't changed. I've probably spent more time debunking false ideas on the topic.
Yeah, same. It's one of those things that as realtors, as real estate professionals, when all this came about and you're looking into it, and you're like, what really changed other than, on the buy side or the sales side, you're just explaining what you've always explained, but now they have to put pen to paper, they have to sign, which is, again, as an agent, besides having to just educate, nothing has changed. As you mentioned, if I'm going to show Amanda's house, and usually I would go and look at the commission, just see what they're offering. Now that's not on there, so now I got to bug Amanda and be like, hey, are you offering commission? Well, yes, I am, G. Okay, how much? Cool.
And what is it usually?
It varies. It varies. Most agents, 2.5%, 3%. It varies. On some things in commercial, which I know a lot of people don't dive into commercial, there's some things on commercial that the total is 10%. Which, and again, it's always been negotiable. It's just more having a conversation now.
Yeah, going off of what you were saying earlier, it's a lot of misconceptions out there. What are some of the things that you are having to debunk or explain that maybe in past you didn't have to?
I think there for a while, the most common question I got was that, if I'm a heavier listing agent. I work, thankfully, for amazing general contractors that are knowledgeable and do keep up with my entity as well. So a lot of my general contractors were like, yep, we're just going to keep doing what we were always doing and stay on that route. A lot of my residential resale sellers would just have questions like, hey, we've been seeing this in the media. Can you explain to us what it is? Or some clients will even have the misconception of, just false information. And so I'm just kind of explaining that to them. But that's really, it hasn't been a lot, but I've probably spent more time correcting the issue.
One of the things that I think is important for us to mention, you talk about, things to debunk. Now, so, if someone says to me, hey, G, I've heard about you, I want you to help me buy a house, before I'm able to show them my house, by law now, which is the biggest change, by law, I have to get a agency form signed, which basically says, in short, I represent you, I work in your best interest, and I'm going to ask, my personal, so this is what I'm going to ask that I be paid 3%. Now, I'm not asking that to come from you, Mr. and Mrs. Buyer. I'm asking for that to come from the seller, but I have to get this signed because now it's a requirement. So the biggest thing is, yes, it's possible for the buyer to have to, but me personally, I don't see a day where I'm going to say, hey, Mr. Buyer, Mr. Seller, you owe me 3%. That's not what I'm going to do. Good business, you negotiate on your behalf and your client's behalf, and you get paid accordingly, and everybody wins.
Yeah, I think that even speaking about that, I know you work with a lot of first-time home buyers because, it's really hard for a lot of first-time home buyers to come up with the down payment, the closing costs, and then if you're paying this hefty fee, and I think that could cause a lot of issues. What has been your solution of how do you talk to your first-time home buyers about even savings goals and what should they be looking for? I know that we're not lenders or
Advisors.
Bankers or anything like that. I'm not trying to put a number or anything,
Yes.
but I feel like as realtors, you guys get asked all the time, what is the magic number,
So I tell people a lot. So that's a couple of questions. So one, as far as the savings go, I tell people, let's just figure out where we're at. Let's get with a good lender. Let them assess your financial situation, and let's go from there. Because a lot of times, I've had clients literally show up to the closing table with nothing. And so you don't need 20% down, like everybody says. I have clients that buy with zero, and then you get some people say, oh, well, they're not putting any money down. Isn't that dangerous? Listen, there are so many things in place to stop that. Number one, you're being approved by a lender to make sure that your income, your credit match what they want, which is actually set by the government. And then on top of that, you're getting an appraisal. So, a person who's a third party to the situation is saying, hey, this property is actually worth what you're going to pay for it. And there's some more things, but those two big things. So yeah, as far as down payment, it varies on your situation.
Sure. And we kind of talked a little bit about what headlines are out there that you're kind of debunking. So my next question, a lot of people feel like realtors are like used car salesmen almost. And so what are some misconceptions about realtors or real estate professionals that you would like to maybe speak to the audience or the people about so that they know what they're getting when they talk to Amanda or G?
How much time do we have?
First one, I will not be showing up looking like my headshot. I will be showing up with a subcontractor t-shirt, leggings, and muck boots 90% of the time. So I'm a whole real estate meme. So that one gets me kind of tickled.
Gosh, there's several things. I think now there's some clients, there's a couple that they probably won't want to speak to me again. But 98% of my clients, we're golden, we're like family. I mean, I get invited to a lot of weddings from past clients, baby showers, attend those, all these special things. But the biggest thing, especially for agents like Amanda and ourselves, we're truly in a business that we want to help people make the biggest transaction that they're ever going to make. And for us, we're not here to force you into a house. I'm not even here to try to sell you on a house. My job in the process is to protect you from start to finish. I don't care about the chandelier. I don't care if the paint color is ugly. That can be changed. What I care is about the structure, the roof, the electrical, to make sure on the finances you're getting the best terms, on the house you're getting the best terms.
And legality.
Yeah, those are things I care about.
Okay, solid. taking a hard switch here. Again, I feel like I should work better on like the transition because I'm just like,
I like it.
At least I'm
You're good.
preparing you. Like I'm
Send
gonna
it.
come for the jugular again, you know, because we're talking about Fed rates, and a lot of people have been really wanting to know like what's been going on with the Feds. They've been keeping an eye on just seeing if those interest rates, like I asked you earlier, will go back down to those 2 and 3s, which they're probably not. But we've kept a close eye on that. And we've also been reporting on the Federal Reserve rate cut, and it also went down by 0.5 point last week. Now, for some, they've been waiting and watching for those mortgage interest rates to decrease as well. And now, according to the home loan giant, Freddie Mac, current mortgage rates are sitting at 2.6% with potential to continue to fall in the future. Now, please keep in mind that that is the national average, and your interest rate may vary. Like I said, that we're not like mortgage people or lenders, so please be sure to connect with your realtor or connect to your bank to do that. So my question to you is, are you anticipating any additional activity because we're starting to see some of these interest rates go down, or we could?
Yes, I do think that we will see it in the event that the rates come down. You know, buyers are going to have more buying power. It's going to be more affordable to them. You may see property start moving a little quicker just because more buyers will come to market. But it's amazing that lenders have so many different products to best fit you into a product that works for you. Also, I know my general contractors that I work for are even trying to help the cause even more and paying into a product to get an even lower interest rate. So even what is out there currently, a lot of the local general contractors are paying funds with financial institutions to bring the rates down to a 4.99, a 2.99. I mean, there's so many different lending products that a good lender is going to look at your file like a snowflake, make sure that everything fits, and do what's best for you.
And I dive into the Fed rate side of it. The Fed rate and mortgage rates don't actually correlate, but they kind of do. What most people need to understand, that the significance of the Fed rate decreasing, the Fed lends money to the banks. And so when the Fed lowers their rates, the banks can now lower their rates on the investor side. So if Mr. Builder is building a house, he's getting charged X percent. Well, when rates come down, his cost to build that house now comes down. And now, you know, most people say, oh, well, how does that affect me as a consumer? Well, there's not as much pressure on Mr. Builder, so he doesn't need to put as much price on the house because now he's got room to move. And so a 0.5 point drop was good. I imagine, based on conversations, it'll probably go down another quarter, maybe even a half. But the biggest thing with the Fed rates, it helps the investor, which then the investor can pass it down to the consumer.
Thank you so much for explaining that, because I feel like we always talk about Fed rates, but we can never really, due to time constraints on our show, we can never really dive deep into why, you know, some of these things matter as much as they do. And staying on like the federal government side for a little bit longer, like a lot of people are really looking to see like, oh, what's going to happen politically? And I just want to preface this by saying we're not talking about like blue or red. Just want to clarify that for the people in the comment section already. You know, we're not talking about anything or endorsing anybody, but a lot of people do wait and to see what happens with the election before they want to make a move in the real estate market. What do you say to people who are thinking that?
I mean, as far as home ownership, I am of the mindset, to each his own. If you need a home, get your family a home. That's your largest asset and investment in yourself. As long as it makes sense to you and financially affordable and it's what's best for your family, I personally would not ever let that hang me up. I would love to put a family in a home. I'm going to put my family in a home regardless. So it's not really been big on my radar. I know that we have had some buyers have that, you know, say I just want to wait. I would say on the flip side, as an investor, I do have some concerns just as an investment standpoint and, you know, tax ramifications and things of that nature. So it's on my radar, but still it's an entity I love, so I'm going to continue to invest.
biggest thing I tell people, because I have people all the time like, oh, should I wait? And here's what I tell people, what I love about real estate. This election is national. Real estate is extremely local. What happens in Bowling Green, Kentucky is no way correlated with what happens in Destin, Florida, Austin, Texas, nowhere else. And so one of the examples I tell people, a few of these tech real estate companies, Zillow, Redfin, and some others, they started buying up real estate based on national ideas. And they lost literally hundreds of millions, both of them. And the reason why, you can't put a national stage, even an election, based on something that's so local, because real estate is very defined, it's very specific. I can't tell you what's going on in Bloomington, Indiana. No idea. But here in Bowling Green, I can tell you, man, listen, we got jobs coming in. We got folks from WKU that STEM. We got this great medical center where people are becoming doctors and PAs, and they're staying. And we're growing. So the election, as far as ownership, should not be a concern of yours.
Yeah, and speaking of that, I feel like a lot of people, like during the pandemic, a lot of iBuyer situations like popped up. Where did those things go? Like, is that still a thing, or like? No,
I mean, here's the thing that happened. Literally, Zillow, Redfin, some of these other companies, they were literally basing national averages, national information, and it does not work. Okay. You have to understand, and that's why I tell people, some people, I'm from Mississippi. I have friends like, man, should I buy this house price? I was like, dude, I operate in Southern Kentucky. And I can tell you everything you want to know about residential real estate in Southern Kentucky, but Mississippi, New Orleans, wherever it is, I don't know. Because real estate's local, so all these iBuyers, they all failed because real estate isn't a national game, it's local.
My last election question before we wrap up. Okay, I've personally seen some headlines that I feel like are incomplete, okay? And it's more so about like down payment assistance programs. And I have bought a home before, and I used a down payment assistance program, and I got my down payment paid for. So there are down payment assistance programs already available that are government issued money. Can you talk to me a little bit about like what programs are offered here in Kentucky that are kind of like similar with down payment assistance?
Again, I would say that's definitely, again, I'm more the real estate side than the lending side, and that's why we lean so heavily on our lenders to look at these files and see what makes sense. I do know that there are several down payment assistance programs that have been very helpful to my clients. It's been smooth transactions. They were extremely excited. The lenders were great about explaining them too, because it is, it's an entity, if you're not knowledgeable on lending, it kind of sounds like a different language for a while. But I do know that we have several available, KHC, and then that's a large one that I know. Yeah. I personally have put several clients to the closing table with that product. But again, a good lender with several different, lending options. And what I love about a lot of my good lenders, and even if they don't have the program that fits that client the best, they will refer them to another lender that has that product for them.
Yeah. There's always several things in place. It's not as large as the $25,000, and that's been mentioned in this election cycle. But here's what it is. It's not as large as that, but there are funds anywhere from $5,000 to $15,000. Some, it may be a couple more, but the ones I'm aware of, $5,000 to $15,000. People just aren't aware of them. And this has been made like a public thing, the $25,000. I don't know that it changes much on the economy as far as people saying, that's going to increase houses by 25%. No, it just helps by 25,000. No, it just helps people lower their payment. Now, would I prefer to see rates lower rather than giving the down payment? Because essentially, home buyers will benefit more from a much lower interest rate than they would a down payment assistance over the long run. When I bought my first place in 2018, my rate was a 3.6, which is a heck of a rate. I mean, it's a good rate. This 6% stuff and previously 7 and 8, man, that's rough.
Yeah.
But yeah.
Okay. My final question before we wrap is any last advice
Ooh,
to
yes.
buyers, sellers about the market? Any last final parting words?
I would say, it's always important to be diligent whenever picking your real estate agent that's going to represent you. Choosing an agent that has been in the industry for a while, or even a new agent that has access to senior agents like us. We have a whole office of a meeting of the minds. You want an agent that is knowledgeable. Working full-time is very helpful just for communication purposes, not only with the client, but also as your colleagues. How you treat your colleagues is huge. Have good rapport with your colleagues, take care of your colleagues, and that will be returned to you, especially in a very hot, busy market. I sold a lot of properties off market, just because my colleagues helping me out, like this is what I'm looking for. I would say that matters always, and definitely, spend time with that, because with these buyer's agency agreements, you're signing a contractual form that is tying you to that agent that you're choosing. So choose wisely.
Yep. I always tell people, don't try to time the market. It's not timing the market, it's time in the market. Buy when you can afford, sell when it makes sense. You're not gonna beat Wall Street. You're not gonna beat the market. It's all about timing. And also, your agent, majority of your agents, there's some bad ones in everything you do, but a majority of your agents, we spend a lot of time with you and your family. Usually when people work during the day, so there's a lot of times we're out 6, 7, 8 o'clock at night, Saturday mornings, Saturday evenings, Sunday before church, Sunday after church doing open houses. We work extremely hard. There's a lot of shows on Netflix that paint real estate as this glitz and glamour and, drinking mimosas all day. We spend a lot of time in the office coming up with strategies, doing contracts, paperwork, and then once we do that, leave our office hours, we're going out at night, the weekend. So we work hard for our clients. We really do.
Well, thank you so much, Amanda. Thank you so much, G-Money. And thank you guys so much for watching the Getting Real with Real Estate on WBKO Plus. We look forward to doing many more of these type of conversations to help you stay informed on the deepest level of growth here in South Central Kentucky. Be sure to follow us on all social media platforms and have a great night.